Oh, hi everybody. Hold on, is this thing on? Okay. Sounds like it's on. Quý vị nghe được không? Thấy được không? Can you hear me? And can you see me? Let's see. If you are watching from the United States, let me see a 1. If you're watching from Vietnam, let me see a 2. Good morning, Vietnam. Canada's 3. Hình như Úc là 4. Okay, let's see who's all here. Of course, chị Minh Châu. Chị Minh Châu from Virginia. We're doing a little dance music. A little dance pop tonight. Why? Because we're going to talk about taxes. Oh my gosh, taxes. So fun. So fun. We got Simon. All right. And I have a little news. Quý vị có thấy on my Facebook, Lina có post. We are at let me see. I gotta check right now. Because hồi sáng post thì có mấy người rất là dễ thương, họ subscribe liền. Okay, so we're very close to 100,000 subscribers on YouTube. Let me see what it is now. What is it now? So we got 91,116. 91,116. Nếu quý vị chưa có subscribe thì please subscribe. Just push on the button, subscribe. Khi mà mình đến 100,000, then it's a party. Then it's a big party. Okay, let's turn the music off. This music's okay, but you know, sao á mình không có feel nó được. Quý vị feel nó được không? I guess it's okay. But no, I don't like it as much as this one. Even though nó dịu dàng hơn. Oh, very calm. Funky. I like it. I like it a lot. Okay. Đó, nó phải như vậy chứ. Cái kia nó hơi sao á, nó hơi gì đó. Okay, we got Ngọc. Lâu dữ mới xem live được vì khác gì mà khác múi giờ. Oh, we've got Nina from Japan. What time is it in Japan right now? Okay. We've got, of course, my buddy Jen Lee. I think that's my buddy. It's a very common name. We've got Sun Huang from Minnesota, of course, always representing Minnesota. Why? Because he is in the house. Means time difference. Oh, khác múi giờ. Okay, here we go. Okay. Music go down. Quý vị biết không, bây giờ là bên Mỹ á. Bây giờ bên Mỹ là mình đã bước vào tax season. Mùa thuế. Không phải là tax time nhưng mà lại là mùa thuế. That's why I had an umbrella. Mùa thuế. Okay? No one really likes mùa thuế. The only people who likes mùa thuế là mấy người làm thuế. It's a busy time for them. Very, very busy time for them. Nhưng mà most people don't like it là tại vì sao? Ủa? Tại vì bây giờ một là mình khai thuế là đã là nhức đầu rồi. Nhưng mà some people là phải đóng thuế. Okay? And then although you have someone who gets a refund. Okay? Hồi trước, my dad was very, very good at taxes. He's very good at numbers, toán. My dad is excellent. Thì when he used to do my taxes, it was awesome. And I used to enjoy getting a refund. That was a very long time ago. Now I don't enjoy taxes at all. Do you? Does anyone really enjoy taxes? Quý vị thấy sao mỗi lần mà làm thuế, even though là người khác làm cho mình, cũng nhức đầu luôn, phải không? So, chương trình hôm nay đó, I hope this will help you. because not a lot of people know about it. Okay? We are doing tax credits for 2023. Tax credits for 2023. Of course, this is for educational purposes only, not meant to be taken as specific tax, legal, or investment advice. For a personal consultation, there's my email, linawin@vanmay.com. Okay. In Vietnamese, everyone says trừ thuế. Okay. Nhưng there are two different types of trừ thuế. There's tax deduction and there's a tax credit. Do you know what the difference is? Quý vị biết không? Tax deduction và tax credit, hai cái nó khác nhau ở chỗ nào? Tax deduction is an expense that you can subtract from your income before calculating your tax bill. Okay? Như vậy là mình trừ nơi cái thu nhập của mình trước khi mình tính là ok, bây giờ năm này là phải là trả bao nhiêu thuế nè. Yeah. Cái deduction là mình subtract from the income. Nó sẽ hạ xuống cái thu nhập của mình. It will lower your taxable income. Okay? What is a tax credit? A tax credit reduces your tax bill on a dollar for dollar basis, and refundable credits can give you a refund if you don't owe any tax. Okay, như vậy là cái tax credit nó sẽ giảm cái tax bill của mình. Okay, dollar for dollar. So that means if at the end of the year or the beginning of next year when you do taxes and your tax bill is $3,500, but you've got $500 in tax credit, well, then now your tax bill is $3,000. So you can subtract it directly, dollar for dollar, from your tax bill. A tax deduction, okay, lowers your taxable income before you figure out how much tax you owe. So which one do you think is better? Does anyone know? Cái nào là better? Mình giảm xuống cái taxable income của mình, cái thu nhập của mình, hay là mình giảm xuống cái hóa đơn thuế của mình? Which one is better? Hello, Tuấn. Hello, Leo Macadang Dang. Or is it Macadang Dang? I love saying his name. It's so fun. Okay, so tax credits are better, dollar for dollar. Okay. But there aren't a lot of tax credits to be had. So tonight, very good. That's right. Tax credits are better. So tonight, I'm going to share a couple of tax credits that you may not know about. Here's the other thing. The more you know, the better. Phải không quý vị? The more you know, the better. Just like when I do like tax-free income and IUL, it sounds too good to be true. Người ta nói, người ta sợ, nó nghe nó quá hay luôn. Nghe quá đã luôn, làm sao nói? Are you sure? They don't believe it. Nhưng mà thực sự mình find out, okay, mình phải là tìm hiểu và mình biết nhiều chừng nào tốt chừng đó, right? You want to know as much as possible. And what you don't know, what you don't know. Nên nếu mà mình không biết, mình không có tìm hiểu, không ai nói cho mình biết, then you miss out, you lose out. Còn mấy người khác, that's why people pay people to do their taxes. Còn như nếu mà you pay your person and all your person does is put it into the TurboTax for you, not good, okay? Okay. So I'm going to tell you about two tax credits that I bet you can use if trong nhà mình có người đi học. Okay? Đi học, không phải là con nít đi học, nhưng mà like after high school, continuing education, okay? After high school, like a college or a vocational school, or, okay? So, or other things. So if you have anyone in your family who is going to school, do you know about these tax credits or have you been missing out? Let's see. The first one is called the American Opportunity Tax Credit. Có ai bao giờ nghe chưa? Have you heard of it? Anybody? Has anyone used this yet? Ừm, nhiều người chưa nha, nhiều người chưa. Quá trời uổng. Như vậy là quý vị đã trả thuế. You've already paid too much tax if you don't take advantage of all the things you can take advantage of. Deneen says, no, she didn't know about it. A lot of people don't know about it. So here is what it is. Okay. It lets you claim all of the first $2,000 that you spend on eligible education expenses plus 25% of the next $2,000 for a total of $2,500. A tax credit of $2,500, you guys. Here are the qualified expenses: tuition, mandatory school fees. Như vậy là tiền học và những cái phí mà mình đi là nó bắt mình phải trả, okay? Books and supplies. Here's what you cannot claim. You cannot claim living expenses or transportation costs. Okay? So, living expenses, transportation costs, let's look again. These are the qualified expenses. And when you have someone who's going to school, of course you pay these expenses: tuition, fees, books and supplies. Mấy cái này mình trừ được, còn cái chỗ ở là không được nè. Transportation cost có thể là con cái mình nó đi học tiểu bang khác rồi mình phải là lái xe đi or whatever. That doesn't count. Okay? Yes, that's right. Kennedy. I love that name. Kennedy didn't know about this credit just in time for tax filing. I know. Okay, rồi. Who can claim? Okay, this is for undergraduate college students only. So you should be pursuing a degree or other recognized education credential. Be enrolled at least half time for at least one academic period beginning in the tax year. So you didn't even have to go to school the whole year last year. You could not have finished the first 4 years of higher education at the beginning of the tax year. Okay? So remember, this is for undergraduate college. So if you already finished first 4 years at the beginning of the tax year, then you can't claim this one. And you can't have claimed it for more than 4 years. Because then you break the rule. Okay? Deneen says, my brother can use this. Yes, he can. Brittany knew about this. Okay, they've been using it. Good for you. Okay. Rồi. And of course, not have a felony drug conviction at the end of the tax year. Okay. The American Opportunity Tax Credit lowers the amount of taxes that you pay. So, for example, if you owe $3,000 and then you take the full credit of $2,500, then you only have to pay $500 to the IRS. Sorry, IRS. Okay? And is it refundable? Is it refundable? Yes, it's refundable. You can still receive 40% of the value, that's up to $1,000, even if you earned no income last year or if you owe no tax. So, for example, if you qualified for a refund, then this credit could increase the amount of that refund by up to $1,000. Như vậy là nếu mình không đóng thuế, mình lại get a refund, thì cái tiền này mình use cái credit này thì mình lấy được về up to $1,000 thêm. Okay? So that's why the American Opportunity Tax Credit is typically the best education tax break for students and their families. Hello, Vivian. Love you back. Roland, thank you. Okay, so here we go. Here we go. Oh, we already talked about all this. I already went through all this. Okay. All right. The next one I want to tell you about is called the lifetime learning credit. Who has heard about this one? Has anyone heard about the lifetime learning credit? Hmm? Hello, Eric. Here is for the lifetime learning credit. It's a federal tax credit that can reduce your taxable income by up to $2,000 if you're pursuing an undergraduate, graduate, vocational, or a non degree program. Okay, so unlike the other one we were talking about, there's no limit to the number of tax years in which you can claim this credit. And here's how this one works: you can claim 20% of the first $10,000 that you paid toward 2023 tuition and fees for a maximum of 2,000 each year. Okay? Course supplies, living expenses, and transportation costs are not qualified. That means now you add supplies to the not qualified list. To qualify, someone must be enrolled or taking courses at an eligible educational institution. Oh, Tuli, great question. Great question. And yes, I didn't even think about it. Good for you for thinking of that. Be taking higher education courses to get a degree or other recognized education credential, or to get or improve job skills. Girlfriend, that's what you just asked about. And then be enrolled for at least one academic period beginning in the tax year. Actually, Tuli, wait a second. You should ask your tax person about that, right? Because it is to improve job skills, although that's a very good question. You should be asking your tax person. I wonder if they'll know. Okay. Um, is it refundable? No. This one is not refundable. Okay, so you can use it to pay taxes that you may owe, but you will not receive the money back as a refund, even if you earned no income or you owe no taxes. Someone asked if there is an income limit for American Opportunity Tax Credit. Nope, not so far as I have seen. Hello, Foon. Okay. So, which one's better? Lifetime Learning Credit versus the American Opportunity Tax Credit, AOTC. The American Tax Opportunity Credit, I did that backwards. It's the American Opportunity Tax Credit, generally more valuable than the Lifetime Learning Credit if you qualify. You cannot claim both. You cannot claim both for the same student or the same qualified expenses. So if you have one person who's going to college and you have someone else who's going to vocational school, you can use one for each, but you can't use both credits for one person. Oh, there's my email. Oh, that was quick. That was fast. That was because there were only two. Okay, so remember that if you joined late. So these are two educational or education credits, tax credits that a lot of people don't know about. Okay, and the better of the two is the American Opportunity Tax Credit, where it actually lowers your tax bill dollar for dollar. Yeah, a lot of people will do taxes and they'll do the the child credit thing, and then nothing else. Okay, so you have to ask questions. Your person may not have thought about it. Someone says it's easy to e-file your return. Yeah, depending on how easy your taxes are. So some people have complex taxes. Complex taxes. Oh, Tommy is telling us something else. It's 90,000 for for single and 180,000 for married. Filing jointly are the limitations. That's good information. Thank you, Tommy. Oh, sorry. Oh, that feels a lot better. Um, a couple other tax notes that I didn't prepare in slides tonight because I've been so busy. Um, I had once done a video on hiring your children, and like people who are not used to it don't think it's legal. It is. People who have never heard of it before think that the kid has to be 16 to work. Not true. Okay. So if you have children and you own a business, so obviously this doesn't work if you're a W 2 employee, but if you have your own business, whether it's, I don't know, if you own your own office, you're running a business, if you have a hair salon, a nail salon, an auto body shop, a restaurant, you can hire your children. They don't have to be 16. And in fact, you want to take advantage of it when they're young so that like all the way up, right? I wonder if I could find the information for that right now. Um, so for instance, if you use your children in an ad for your business, they are now your employee. Okay. You pay them as a model for appearing in the picture for your business. That's a marketing expense for you. The wonderful thing about it is that it is a tax write off for you. Sorry, I'm trying to see if I can find it. It's a tax write off for you when you pay your children, and then your child gets to accept that income without having to pay taxes. Quý vị nghe rõ chưa? Như vậy là nếu mà mình có một cái, tiệm nail hoặc là cái nhà hàng hoặc là whatever, OK, mình có thể là mình hire con cái của mình làm cho mình, không cần phải đợi đến nó đến đến khi nó 16 tuổi. It's actually better nếu nó nhỏ, là tại vì you can take advantage of it until they get older. OK? Cái tiền mình trả cho con mình á, mình được trừ thuế, trừ nơi cái, business tax của mình, tax của business của mình. OK? Mình trừ thuế and nó nhận được cái thu nhập đó nhưng mà nó không cần đóng thuế. OK? Tommy seems to know a lot. I love it. Tommy said, that's right, because there's a lot of young models and kids who get paid thousands of dollars to be on TV. Exactly. Hmm. Vincent, by the way, Vincent is one of my agents. Love Vincent. Vincent is in Alabama. And I really, when I first met him, I loved, he speaks great English, but he speaks it with a kind of a Southern accent. And sometimes it's funny. But Vincent says, small business owner, you can pay your child up to $13,850. And in 2024, they raised that to $14,600. Okay. Okay. How old before they have to start paying taxes? It's not age, it's the amount of money that you're paying them, one, because let's say you hire your 4-year-old and wow, you're really putting that 4-year-old to work, man, and you pay him a lot. If you pay him over that amount that Vincent just showed us, they'll owe taxes. Now, see, this is where you actually need to talk to someone. So I'm just telling you what I know. You should really be talking to a tax person, okay? for your specific situation. But for instance, let's say you own a business and you make a lot of money. And if you hire your kids to sweep the floor, wash the dishes, be in marketing material, okay, you can pay them up to that point with no taxes. If you pay more, yeah, they'll have to pay taxes, but they're still paying like 10%. So what's better for your family? Mình trả tiền cho con mình trong cái số mà trên cái số mà nó hơn cái threshold đó, nó phải đóng 10% thuế. Còn mình á, mình own cái business mình đang đóng là 37% thuế là sao? Right? Which one is better? So that's where you have to do the thinking and the planning. Okay. Hank asked about how about hiring older parents who are on Social Security. Older people get on like marketing ads all the time, and they're on Social Security. Again, right? Even the Social Security, there are tax brackets for everybody. So that's what you have to look at, and most of the time, it's better for your taxes because your business probably makes a lot of money. You need some tax deductions, and if you are hiring them, so don't go out there and commit tax fraud and say I'm hiring my dad, and then your dad has never done anything for you. So don't do that. Okay, like my children, they do data entry for me. I do. I have a lot of data entry. I have these CRMs and like for my charity, I get them so that they get like used to working data entry. This is how you do spreadsheets, all this stuff, and they're great. Here's the better part. Here's the better part. Okay. The better part is once your children have earned income, they can now open up a Roth. Mm-mm-mm. Do them a favor, do that. Do them a big favor, do that. Okay. I should look because I did a video on this a long time ago about hiring your kids and uh, mm, and all the rules I had in there because I don't want to just be talking and not, okay. So if you're going to do this, please look it up. You just look it up. It's out there. Now that you know about it, it's out there. Look for it. That there's federal, there's state, and then so just be careful what you're doing. Oh, someone asked if I could please explain 401k. 401k created in the late 70s because at that point the highest tax bracket was 70%. What does that mean? 70%. That means, can you imagine if you had to pay 70% tax right now? Oh my gosh. You'd storm every building you could. And so they created this new tax code to help people. 401 Section K. That means they're going to let you defer your taxes. Okay? That made sense then. It made sense for a while. People don't realize, though, right now, we are paying historic low income taxes. Meanwhile, the deficit is at near historic highs, if not historic. I don't even know what it is right now. So you then must ask yourself these things, knowing these are the rules of the 401k. You put money in a 401k. If it's tax deferred, that means they take money from your paycheck before tax. Phải không? Mình bỏ tiền vào 401k, mình chưa đóng thuế. Tại vì quý vị không thích đóng thuế. Okay. So you put money in a 401k, maybe $1,000 for every paycheck. And then what? And then you let it grow. And then you let it grow. And then, I don't know, 30 years later, when you're finally retired and using that money, you then have to pay tax at the current rate. So if you don't think tax brackets are going to change, you don't think they're going to raise taxes, then I would defer taxes all day long. But if you think that they might raise taxes, then you really have to think about what you're doing. Okay? Another thing, mình bỏ tiền vào 401k. The moment you put it in there, you cannot touch it until you're 59 and a half. Unless you do these other things, right? Unless you have some kind of a hardship and then you're borrowing it, but then you're taking money out of an account that is supposed to be for your retirement. You're supposed to grow it. Or if you access it early, you get a 10% penalty. Okay. So that's one thing. Can't touch it till you're 59 and a half without penalty. Taxes when you take it out. RMDs, for most of you watching right now, age 73. Required minimum distribution. No one thinks about that. And there are many generations of people who don't even know anything about that. An RMD is a required minimum distribution. Why? Because the government says, hey, I want my money. I want my money because you haven't paid any of it yet. So they're going to make you take out money from an IRA or a 401k, all tax deferred retirement plans that are made with pre-tax dollars, right? Tax deferred. They want their money. So at that point, you can no longer control how much you're withdrawing. Because some people say, oh, when I get older, I won't need that much money. So I'm just going to withdraw a little bit at a time. Well, depending on how much you've got in there, you hit 73. There's a formula. A formula, baby. You can't control it. And you know what happens? Again, if you remember nothing else, when you take money out of a 401k, they don't subtract the taxes before they give you the money. It doesn't work that way. They give you the money, and then at the end of the year, like everything else, like all income, they figure out your taxes. And then you owe taxes. And you know what happens with a lot of older people? They're living on fixed income, man. They're like, all their money is accounted for at the end of the month and at the end of the year. Then they get a tax bill and they're like, I don't have this money. I'm going to go back into my 401k and take more out, which then does what? Raises their income, raises their taxes. So to me, most people really should only be contributing whatever the company's matching so you can get their money. You have to pay for it. And then the rest of it, invest so that you can get it out tax-free. Like, there is that option. Why not choose that option, right? Before, people didn't have any options. They didn't know anything. They didn't know any better. You guys, there are other options. If I showed you, for instance, like Roth conversions, now employers are required to offer 401k Roth. Why? Our retirement system is broken. So many people are in trouble. So they keep changing the rules. They keep pushing the bracket. They all do it. Why? Because people are in trouble. Okay. And so now they're like, oh, like, we're killing people. Let's give them this option that's not so bad. There are options where you can invest your money, grow it tax deferred, and take out tax free. There are even some options, also tax free, where you can take it out anytime you want for any reason without penalty. And then there are those options where you also have a 0% floor, which means you're not going to lose your money because the market crashed. So I constantly talk to a lot of people who have money in their 401k. They think they're set. They're not. they're like 55. And I'm like, oh, when do you want to retire? Tomorrow, right? As soon as possible. How much do you have in your 401k? Oh, 250,000. So people also have no idea how to think in future dollars. Future dollars, because a dollar today is not the same as a dollar 5 years from now, let alone 20 years down the road, 30 years down the road. Same thing when we're talking about life insurance. Okay. 20 years ago, when you bought it, $100,000 seemed like a whole lot of money. $100,000 is nothing. So when I talk to a person who's like, 40 something, 50 something, and all they have is $100,000 of death benefit, I'm like, whoa, what if you live another 20 years? And that only gets you to 70. Like people are living longer. So that's another problem. People are living longer and they did not figure costs for medical care. They think Medicare is going to take care of it. Doesn't. Okay, so that's another one. Oh, I could go on and on. Social Security is not going to be around for much longer. By the way, your Social Security, if you have participated in a 401k or other retirement plan at work, that makes your Social Security taxable. And I've talked to people who have worked for 20, 30 years, okay? And if you don't make a lot of money, you're not going to have a lot of money for Social Security. Nhất là mấy người mà làm nail nha. Okay? So I got a lot of people who khai mình làm ít tiền. Để sao? Để mình đừng có bị đóng thuế. Rồi sao nữa? Thì đóng thuế ít thì sau này Social Security cũng ít luôn. There are people who've worked, 20 years, 25 years, 30 years, and their Social Security is not going to make a difference in their household expenses when they retire. So, anyway, I don't know how we got off on this tangent, but it is very, very important for you to take a look at what you're doing with your money. No one else is responsible. No one else is responsible for your money other than you. Other than you. And I will do a whole another show on women and finances. It is so, on one hand, it is very sad to see so many women in relationships and marriages and arrangements where they know nothing about their finances. They have no control. They make money, but they, like with their own money, can't even put away a little bit for their own retirement because he won't let them. Okay? That's really sad. And then I talk to women after they're we go through the plan and they like, you could see them change. You could see them change. They have worked so hard all their life. They take care of the kids, they take care of the husband, they take care of the parents, they take care of the family, brothers, sisters. And I'm like, it's time to take care of you. And then when I see that and I see that I mean, you guys, when you look at a lady and she's empowered, she's a different person. Let me tell you that. I can see it. I can see it. So you are the only person who is responsible for your financial future. And if you are in a situation where, for instance, the unthinkable, like the actually priceless job of being a homemaker, being the person who keeps the home together, who does the dishes and the laundry and cleans the house and cooks and cleans and does everything for everybody, doesn't really get paid for it. If you are that awesome person staying at home, taking care of everything so that other people can go to work, please make sure that there is a plan for you. Please make sure that should something happen to the person who's bringing home the bacon, you're going to be taken care of. Okay. I very often have to point out why you shouldn't pay off your house. Like we Vietnamese, we love to pay off the house. In fact, I think it was this morning or yesterday, I talked to someone and their mortgage is I think 1700. It was today, 1700, but she pays 4000 of it. I'm like, "Oh, wow. Why?" Right? Make sure that you've done the math, right? Does anyone know? Let me see it in comments. Does anyone know why you shouldn't pay off the house? Why shouldn't you pay off the house? You should not pay off the house for a couple of reasons, especially when you've had that home mortgage for some time. I talk to people who go 2.75. I'm like, what? Right? But even if you've got something for 4 or 5, same thing. You've got a great interest rate on a balance that's going down. You get to write off the interest. So that's a tax deduction that you won't have when it's paid off. That's one. Two, especially when your rate is 2%, 3%, 4%, why would you throw your extra money and pay that down? What you should be doing, pay the minimum, write it off in taxes, and invest the extra money and grow it. Because think about this. If you could grow that and let's say make even just 7%, you can still like use the money to pay off, your mortgage every month. But then now you've got cash flow. Now you're positive, right? That's smarter. And so many parents love to pay for their kids' college, like just straight cash out of that they've saved. Like, why? It's wonderful that you want to help your kids, but if you put some thought into it, like do even better. Okay. Oh, Danine is asking me, what option can you put in tax deferred and pull out tax free? Well, you can't put in tax deferred and pull out tax free. It's you always must pay taxes because why? Because we're in America. You pay now or you pay later. Pay now or pay later. So you have to ask yourself, what's better for you? Pay now or pay later? Don't say pay later only because you hate paying taxes, because then you haven't done the math. And if you don't do the math when we're talking about finance, then you're fired. You are fired. That means you're now unemployed. Okay. Speaking of unemployment, did you guys know this just came out? Hinyu Homnaina, it just came out today. California, number one in the US for unemployment. 5.3 jobless rate in February. Okay. So you can't put anything that's tax deferred and take it out tax free, but you can be smart about it and little by little pay your taxes now, grow it tax free. So for all of you who have like a big chunk in your 401k right now, just know you're going to lose like 30% of that at least to taxes, okay? Now, just imagine, let's say right now, let's say you're sitting on 500,000 in your 401k. You think you're doing great. Sounds great. It's not. But imagine if that was all tax free. Big difference, right? Okay. So then let's go backwards. Had you just paid a little bit of that tax each paycheck. Okay, so each paycheck you're putting away, just pay your taxes. You know what your tax rate is now. You don't know what it's going to be. It's like saying, that like you actually it's not like saying you are telling the government, "Here, I'm going to let you have my money and let's invest it together, shall we? And when it comes time for me to take out that money, you can tell me how much I owe you later. You can tell me what the fee is later." Yeah, I'm gonna buy into that. You can tell me how much I have to pay you later. So pay your taxes now. Grow that money in a place where when you take it out, it's going to be tax free. So, for instance, that's why Roths are great. Roth is with after tax dollars. You grow it, and when you take out, it's tax free. It's awesome. Now, the problem with Roth is this: there are income limitations. There are contribution limits, just like with an IRA. By the way, 401k, same thing. There are limits as to how much you can put away, how much you can save, how much you can invest. So, Roth is better in that at least of the gains, you take it out, you're not going to have to pay taxes on it. But like a 401k, like an IRA, money in a Roth cannot be touched until 59 and a half. Otherwise, you get penalized. Okay? Well, then where the heck can you actually invest money and take it out tax free? Better yet, what if that investment also came with a guarantee that you could never lose your money because of the market? I would say that's pretty awesome. And it is. So it's, Deneen, I don't know if you've ever heard me talk or if you're in the business or whatever, but girlfriend, IUL structured correctly with a client who knows what they're doing, who understands the concept, who says, yeah, it's a no brainer. Because money that goes into an IUL is after tax dollars. So anything you make in there will be tax free if you just do it right, structure it correctly. Okay. You can't over contribute. Over contribute $1, y'all going to be taxed. You can't go backwards. You can't say, oh, sorry, I accidentally sent you an extra dollar. They don't care. Okay. And what's really cool is that in addition to tax free cash, let's throw in a death benefit. So let's say Johnny here is just starting to contribute. Okay. He's only put 2,000 into his plan. Johnny gets hit by a bus the next day and dies. Well, Johnny's family will have a huge death benefit that is tax free to them. You don't get that one with a 401k. You don't get that with a Roth. You don't get that with a IRA. You don't get it with a CD. You don't get it with a bank account. You don't get it with a brokerage account. What else don't you get it with? You don't get it with anything. You only get it with life insurance. Permanent life insurance, by the way. Okay. Oh, and also, if it's okay. What if you don't die? What if you get sick? You have that protection too. You don't get it with all any of those other things. So, like, if you've never heard of it, I know it sounds like I don't know. It sounds like a scam. Sounds too good to be true. Mm, okay, I have 3 policies myself. My kids have them. My kids are going to be set, man. I have helped families do policies for their children who just born, who are going to be like able to retire at like 40 and take out a ton of money tax free. Now, you may be asking, at some point, might the government say, Well, wait a second, because they do that. And they say, wait a second. No, 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 no. We're not going to let you do that anymore. Might they? They might. But once you're already in, you are grandfathered. It's a contract. It's a legal contract. They cannot take it away from you. Okie dokie. Okie dokie. Hello, Michelle. Hello, Michelle from Seattle. Um, oh, someone asked, long-term care trong IUL có thể dùng cho nursing home không chị? Yes. Nhưng mà this is what you have to remember. There's long-term care insurance is completely different. We are not talking about that. When we talk about long-term care costs, we're talking about, for instance, if you've heard of it, the six activities of daily living, ADL. And if two of those you can't do without substantial help, then you qualify. So it's the thing that you talk about. Một là mình có người tới nhà take care mình, hoặc là mình phải vào nursing home. Okay? So the money that we call living benefits, okay? Living benefits, that means you don't have to die to benefit. Okay? Living benefits. It's cash. So let's say you get sick and you have your aunt is going to take care of you. They still give you the money. You can pay your aunt if you want to. Or maybe you're going to take that money and you're going to fix the house in a way that is easier for you to get around since you can't walk up and down the stairs anymore. It's cash. You can use it for whatever you want. They don't require receipts. They don't require that you must pay a caretaker to take care of you. It's cash. Now, if you're sick, you should be paying for care. Okay? Nên nursing home hoặc là any kind of you could use it for whatever you want because it's cash. Okay. Hello Đức. Đức từ Việt Nam nè. Đức rất là dễ thương luôn. Okay. So those are the things that we should be thinking about. So as you gather those receipts and make that fun tax appointment, start thinking about how you are handling your taxes and like what your future looks like. Okay? Remember, the moment you put your money into a 401k, it's stuck in there until 59 and a half years old. So if you like the idea of having access to your cash, if you like the idea of not paying any taxes on the money that you make, if you like the idea of, whoa, the market just crashed, everything looks red, people are mad, and I've not lost a dollar because of it. If you like the idea of, okay, I'm healthy, I'm working right now, but should I die, my kids are taken care of. They're going to have the money to make sure the house is paid off. They're going to have the money to make sure they can go to college. Okay? People who say, if I say, nếu mà ngày mai mà chị mất thì con chị làm gì? And then they say, thì nó có cái nhà. No. Cái nhà doesn't mean anything. How will they stay in that house? Okay? So I have a couple of real estate professionals who are now a part of my team. And I love the work that they've done, and they really enjoy putting families in homes. It's like, I found this family, like their perfect dream home, and help them get it. That's very rewarding. So now they're also helping them stay in that house. Okay? Whether you have paid it off, whether you're still paying the mortgage, it's important to have protection, to have backup, so that if something should happen, you can stay in that house. You don't have to sell it. And we've seen it happen time and time again where, dad who makes all the money has a heart attack, dies. And mom is left like not knowing anything about their finances and really struggling because, well, she's not making the money and now he's gone. So please protect yourself and your family. And I know there are some people out there, by the way, I think is very selfish. There are just people out there who's like, no, no, no. They don't like to talk about it. Like to them, the thought that, oh, if I die, my wife and kids are going to have money. Like they don't like that idea. I don't understand it, but there are people like that, right? Well, you can never go back. Never. You can only change what you do today so that you can hopefully change tomorrow. And so if you are worried, if you think that maybe down the road you might be in a tough position should an emergency happen in your home, you need to do something about it. You just do. So, IULs, there are so many different ways to structure them. I could structure it for a baby, and I think I have like 4 like baby. No, we're not talking kids. We're talking babies. We can structure it for babies, we can structure it for teens, young adults like 20 something just getting out of school, all the way up, right? I help someone who's 70 something. There's a way to do it at whatever age, but the best time is like you're not going to get any younger. That will never change. We don't know if you are going to be as healthy tomorrow as you are today. That's why you need to think about it and take action. Right? Right. I see families who've been by the way, I'm not bad mouthing term. Term insurance is awesome. Term insurance is awesome for the right reasons, for the right person, for the right family. But for people who think I'm just going to buy term cuz that is the cheapest and that's no, cuz if you can't afford it, you should buy permanent insurance. There's a reason. There's a reason why term is so cheap. Have you thought about what that reason might be? How the heck can I get $500,000 coverage and I'm only paying $40 a month? Why do you think that is? Term normally doesn't pay out. Most people don't die within the term. And so when you buy term, if there's a reason for it, it makes sense. Absolutely. I recently have been looking at people who bought term, and I don't understand. For like $100,000 coverage, 30 years, and they're paying like $67 a month. They've paid in it 30 years already, and they're going to live at least another 30 years. It doesn't make sense. So please just plan ahead and really sit down with someone and look at your options because it's never going to get better than today for you. It's when we're talking insurance, never going to get better than today for you. Unless you're extremely unhealthy and you are like on your way to losing, 100 pounds, you quit smoking, bringing your sugar down. Unless you're in that situation, most people would benefit doing something today, not waiting. I've seen what can happen. But moral of the story is this: whether you need protection, whether people count on you, whether you have kids, a spouse at home who depends on you, okay? Who depends on you for most everything. Whether you are that person or you're the single person, you've got no worries in the world, no one to answer to, no one to leave money to. Oh, that type of person needs life insurance. Why? What happens if they get sick? And most people do. 70 years old, no family, no one to take care of you. Then what? You need money. Or say you live a long time, use cash. Take that death benefit out as cash and use it. And then there's everyone in between, right? So you gotta take care of your own family. Okay. If you have a partner who uh, have that tough conversation, don't be shy. And if they react in a way that is, then you need to question why. Okay. I have a friend whose husband died of brain cancer, totally out of the blue, unexpected, and changed the entire family dynamics. And in her future relationships, she just said no. I've been through that, and her current partner, she was like, "Hey, if you love me, this is going to be a long term deal. You have to have life insurance because I'm not going to go through that again." And guess what? He got it. Why? Because he loves her. So love yourself, love your family. Just be careful where you go for it. Be careful who does your deal for you. Make sure they're giving you the absolute best that they can do for you. Okay? Okay. Well, geez, that got so serious so quick. Ugh. All right. Here we go, you guys. Let's feed some ducks. No, are we or into space. Oh yeah, this is into space. Okay. Thank you for watching. Look up those tax credits, y'all. Happy tax season. We got 2 more weeks until, oh my gosh, 2 more weeks. Until you have to file your taxes or file for an extension. Do it. Do it. And hey, if you're interested in that tax-free stuff, email me, okay? Email me, and we'll see what you qualify for. Like, let's not leave money on the table. Like, why would you do that? Let's not leave money on the table. Here we go. There's my email, lenawin@vanmay.com. Man, I love that music. No, I'm not in Texas, but I'm licensed in every state. Sorry about the guy's name. All right. You're welcome for the information. Yes, living benefits. That's where it's at. That's where it's at. And you're right. Best time was yesterday. Best time was yesterday. You don't know how to do your taxes. Find a professional. Find a professional. Okay? And for all of you who like have a professional to do your lawn, hello. Why don't you have a professional to do your finances? You got a professional cutting your hair? Why don't you have a professional growing your retirement? Bye, everybody. Bye, Brittany. Have a great night, everyone. Thanks for watching. We'll see you again, I think, Thursday for a fun English lesson. Okay.